I've got a warning for Dogecoin holders that I want to share with you guys in this video. While I am bullish in believing that Dogecoin can achieve a $1 or maybe even a $2 price in this bull market, possibly even in the year 2025, right now there are two key things that are causing a little bit of a hurdle for the crypto market to make Bitcoin find that new high and get altcoins truly rallying again. Now, at any moment, we could see these things start ripping, but there are two major catalysts, I believe, holding Dogecoin back right now and the rest of the crypto market. Let's look at the key level that I'm looking at for a bounce for a potential long trade that I would feel quite good about for Dogecoin. Personally, again, not financial advice, guys. We are here to provide crypto content, crypto news, and look at some levels for folks to consider as you do your own technical analysis and look for trading opportunities or very simply dollar cost averaging opportunities. And I'll say this, if you are dollar cost averaging into a coin like Doge, I personally believe that there is going to be a tremendous amount of upside ahead for this coin. So in the long run, this warning I've got for you guys today is not relevant if you've got a 6-month or a even, 5-year time horizon for a blue chip crypto like Bitcoin and even Doge, which I consider a blue chip crypto, given the fact that it does have an ETF coming in 2025, the first meme coin to ever have an ETF. Kind of unbelievable. Welcome back to the Crypto Report, everybody. I'm Crypto Kip. Smash a like, subscribe to the channel. My level that I am warning everybody of today is a test back down to 15.8 cents. I was hoping maybe we'd see this move to 33 cents. Some kind of bull flag was playing out for Doge on a lower time frame. But looking up now at 34, 35 cents as a potential breakout point, that is still on the table, but I do have some thoughts to say we might see Dogecoin reach back down to 15 or 16 cent first. And let's get into a couple reasons for it. Again, tap the like button, guys, and subscribe if you haven't done so. If you want to trade Dogecoin, by the way, this is a great trading platform that we like to use a lot here on this channel. It's called Blowfin, and you can deposit money, get up to a $5,000 deposit bonus when you sign up using our link. You can trade Doge here or simply just chart it on this platform as well. Like it quite a bit. So first up, regarding Dogecoin, when you look at some news stories that are coming out, there are two coins that you're going to see in the headlines a lot. It seems like XRP is one of the hottest coins in crypto these days, and Dogecoin has been in the headlines in crypto for a very long time and is still one of the top coins that gets mentioned in this crypto space. And what we're seeing right now is not just Dogecoin coming down a little bit today, but really the entire market of crypto is kind of coming down today. Look at all the red here that you can see on these tickers for these different cryptos. A lot is down. A couple coins are up. You got SWE up 0.5% and Sol down are up 0.13%, but XRP is down 2%, Doge is down 2%. ETFs coming later this year for those coins. Cardano's down and ETH is down as well. Why are these down today? Well, I want to tell you guys the two major reasons why these are down. So in this article by Benzinga, referenced by Yahoo Finance here, what are the main reasons? They basically lay it out right at the bottom. I wish they just say it right out of the gates there, but what's weighing on the markets right now? There's no single thing behind the dip today, but the biggest things are still tariff concerns. Even though the U.S.-China agreement's looking decent, we still have some stop-and-go tariff policies, according to KPMG's U.S. chief economist. And that means disruptions for supply chains, policy missteps, and raise the risk of stagflation. Okay? The combo of slow growth, rising prices, and higher employment. Why is this relevant for Dogecoin and Bitcoin? Well, guys, it just is super important. The bottom line is because when you want to see your crypto risk on assets rally, that's what crypto is, a risk on asset, you need Fed rate cuts. You need a confident Fed. This brings me to point number 2. The Federal Reserve remains cautious and is keeping its interest rates steady, citing persistent inflation and geopolitical uncertainty, aka tariffs, and some of the other conflicts going on across the world. For risk assets like crypto, this means less tailwind from easy money and more market sensitivity to macro headlines. What they're saying here is the Fed is being cautious. They cannot lower the rates yet. If the Fed can't lower the rates, then that is a less of a chance for a rally on risk on assets. Now, let me be very clear, guys. If the Fed chooses to not lower the interest rate, that is not a 100% certainty that crypto, Dogecoin, and Bitcoin aren't going to rally. But there is a very strong correlation with the moment when the Fed cuts rates and when cryptos rally. When we see the Fed cuts rates, not only does Bitcoin rally, but altcoins start to outperform Bitcoin. And that is something that if you're holding on to Dogecoin right now, you're waiting for it. You're waiting for this big move where altcoins start to bleed against Bitcoin. And I believe we can see that at the very least at a 73% Bitcoin dominance. We're currently at 63% Bitcoin dominance, and Bitcoin dominance was falling down a little bit, but now we've got 2 weekly green candles that are occurring in a row, maybe shooting a little bit higher, giving the Fed more time to watch the data come in, giving the government more time to improve the data, giving this current president more time to fix this tariff policy that's been going on and ease some of the fears over stagflation with some of the policy. But there's no guarantees that it's going to happen. I think this is one of the main reasons that people are starting to talk about a super cycle, because clearly there are some very big things happening in the US government that are pro-crypto. We recently had this stablecoin bill that is now got passed by the Senate, needs to get approved by Congress to actually become law. And we might see this come into play here soon. This is a very bullish factor for crypto. You've got a Dogecoin ETF happening later this year. But while we sit here and look at this uncertainty with tariffs and we look at everything going on in the macro side of things, and you've got the Fed pausing and not wanting to cut rates yet, there is a chance, my friends, that you could see Dogecoin come back down and test this level. There could be an opportunity to potentially short Dogecoin down, and I got to tell you guys, I've been actually thinking about it. I've been thinking about shorting Dogecoin down to this level now that we've had a nice pump, maybe taking a little bit of a short position as a hedge against my holding portfolio, right? To kind of earn some profit through the volatility. And then if we do tap down to this 16 or 15 cent level for Dogecoin, right at this blue trend line, I would be looking at that as another long opportunity, because I do believe at some point we are going to see Bitcoin dominance top out. We are going to see the Fed's cut rates at some point, and we are going to see Dogecoin rally to $1, maybe even $2, and it could even go higher potentially. It's something that I'm looking out for, and I'm going to keep a close eye on and keep the content coming to you guys. That is all I have for you in this one. I am Crypto Kip. This is the Crypto Report. Do me a favor, smash a like. Subscribe to the channel, DCA HODL, and of course, my friends, I'll see you in the next one. 2 videos here if you want to check them out. I'll see you next time, folks. Peace. If you want to sign up for Blowfin, check out our link down below. Peace, guys.